So here's the thing that no one wants you to know. Excellent service can save a bad meal, but an excellent meal can be ruined by bad service. We think it's time that the front of the house got the spotlight they deserve. Welcome to Dine and Dish, where the business of dining meets the art of hospitality. All right, everybody. Well, we are back for another episode of Dine and Dish, and I am so excited for this show today. My guest is one of my closest friends. We met, oh my God, I think almost 4.5 years ago. I'm going to tell the story once I introduce her, but we have become such good friends, and today's show is going to be so much fun because you get to hear my West Coast blonde self and the East Coast brunette self talk tax and business systems and services. And I can't even believe we're going to talk business because we talk every day about everything else. But let me introduce her. Jill Risbon is on the line. She owns and runs Acme Tax and Business Services out on the West Coast. And Jill, are you here?
I'm here.
Yay! I'm so excited to have you on my show.
I didn't know we were doing a show on this. I thought we were talking about our next vacation.
Well, we can do that too.
Okay, good.
So, we have to tell the listeners how we know each other. I mean, this is such a crazy story. I have to open up by saying our worlds kind of collided and met just so unexpectedly. Her daughter and my daughter attend the Naval Academy, and we were there for plebe summer. It was I Day, and for everybody that knows Annapolis, Annapolis is known for the Naval Academy, and everything Annapolis is Navy. And I Day is such a big deal in Maryland. And Jill flew in from the West Coast to watch the doors slam when
Oh,
I know, right? Doesn't your heart
it's
drop every time we say
still,
that?
still to this day. It was
Oh my
just
God, chills.
incredible.
But I have to let everybody know because not everybody knows the whole deal. So I-Day is in basically they're inducted into the Naval Academy, and that's the day that they get tortured for how many weeks is it, Jill?
Six, at least
Six
six.
long weeks of intense training to get them ready for their schooling and their training. And um, we met at the very end of I Day. And what happens is they go through this whole day. And then at the end of the day, they march on um, to this open area of seating right in front of one of the largest buildings where they're going to live. And they march in, and it's almost these huge doors. I mean, imagine these big metal doors, bigger than life.
What are they, like 30 or 40 feet high?
I don't even know. They're huge.
It's
And
crazy.
every last one of them marches in, and at the end, the doors slam and it's quiet. You can hear a pin drop, and it's like boom, boom. And I think it knocked the wind and air out of me. Would you agree?
Yes, you can hear teardrops.
It was
That's what you
horrible.
hear. The
I
little
I
drop falling.
oh my I think out of all the memories of the Naval Academy, I think that's the one that I vividly remember. And then I turned around, and there was Jill. And that was, I think, the best part of the whole day.
Definitely the best part of the whole day. I mean, it was amazing to see our kids do that and the way they parade them in front but when those doors slammed, you just want to run after them and open the door and wait, "Come back, come back."
I know. And then I was privileged and asked to be a sponsor mom for her daughter. And the craziest of the whole story was, here I meet Jill, totally unexpected. Her child plays soccer. My child plays soccer. We didn't even plan it, didn't even know. And then fast forward, we get to the end of plebe summer, and my daughter and her daughter wound up being really good friends. So it was kind of a chance meeting, but I guess, meant to be, right?
It was definitely meant to be. You
Yeah.
and I will be
And
together for life.
I know. And you know what they say with the military, your friends and the people that you come in contact with, it's just different. They become family and they become long term friends. And, we really got to experience that because it was such a chance meeting. And as you get older, you always say, you don't need new friends, you know? But then you meet someone that you really connect with. And we always say, we're like, she's my other twin, blonde, and here I am, the brunette. But here we are in opposite ends of the world. She's West Coast, I'm East Coast, and we've become such great friends. So I'm excited to have you on the show today, Jill.
I'm excited to be here. I wish I was
Yeah,
there. Well, I'll be there. I'll see you Sunday.
I know, which is so exciting. So we could have really done this live if we would have planned better. All right. Well, for the listeners, obviously, Jill, you and I can talk for an hour, but we only have 40 minutes and we really have to get going on what the whole agenda of today's episode is about. And I brought Jill on because obviously, in the service industry and hospitality and restaurants, and that's any business, you really have to prepare for year end financial success. So, when we talk about year end financial success and we talk about what to do for planning for 2026, it's really important to be set up for success. And, allowing Jill to be on our show today, she's going to kind of talk us through what we should do, what we shouldn't do, maybe some blunders or things to look out for. So, talk a little bit about what you do on a daily basis for your clients. So, I know you focus more on a little bit of a different industry that I'm in, but we have so many different listeners all over the country, so they from California to Chicago to Boston, and everybody's in so many different types of industries. But why don't you tell them a little bit about what you do for your clients?
Well, exactly what we're talking about. We do bookkeeping and filings for a myriad of different clients, but we do it monthly and we, check in with our clients and go over and review their expenses. The biggest thing is when you're dealing with your business accounts and a lot of these smaller corporations, is to keep your personal and your business accounts completely separate. There's so much commingling that I see that takes place, and that's one of your biggest red flags. You
I
just
know. Oh
really,
my God.
really need to separate it, and you need to stay to that rule and don't bend no matter what. Because I hear all kinds of excuses. Well, I needed this, that, and it just creates a hot mess in your books, and you can avoid all of these problems by just keeping them separate. It's not that hard to do.
Yeah. Well, let me ask you a question now that you kind of brought up a hot topic. A lot of restaurant owners, and I'm sure a lot of business owners in general, like to write a lot of things off. And, one of the things they say is, oh, put your phone bill through there, put your car payment through there, put this through there, because obviously the more you write off, the better. It doesn't come out of your pocket. You don't have to show as much taxes. And you just said no commingling, but obviously that's commingling, right?
It is.
What's your thoughts with that? Would you say not to do it? Would you say to do it? Because there's every business needs some kind of expenses. You want to write them off, whether you travel, whether it's your car, whether it's gas, mileage. We say no commingling, but there has to be some type of, crossover.
Well, when I say commingling, like I'm talking about actually paying a complete personal expense out of your business account. Like your gym membership, for instance. In no place does that ever belong on your business account. It's not deductible. It's not even deductible on your personal side. So just things like that. People slip stuff through or different things. But as far as your cell phone, if your cell phone is used for business, you can write off a percentage of your cell phone through the business. That's fine. Same with your cars and your auto's expenses.
And miles, right?
Miles, there's different ways you can do it. You can have a situation where the company is paying for the car completely and it's 100% business use. We don't use that car for personal use. Or you can do an accountable reimbursement plan where you can submit your miles and out of pocket expenses to your corporation or your company and have them reimburse you. And then the company takes 100% of that expense and you get reimbursed.
Yeah. Well, I guess why this is so important and all these things we're talking about, because margins are so tight these days. With every business, there's only so much. You can only control the controllables, right? So you can't control rent, you can't control phone, you can't control BG&E or whoever your power system is and water. There's only certain things you can control, like payroll and food cost or, buying costs. So with margins just getting so much tighter with every type of business, everybody's always looking for a way to write some of that off.
The IRS, our friends there are always going to allow us to, the rule of thumb is reasonable, ordinary, necessary, and customary. And
Okay,
if
so
you're,
for the listeners, why don't you explain that a little bit?
is it reasonable? Like, I have a client who has a small sandwich shop and she wanted to buy a Range Rover to make deliveries in.
Of
Doesn't sound too
course.
reasonable. Things
So would
like
that
that.
not be reasonable?
No, it would not.
Okay. So that's the first one.
Ordinary expenses like you said, utilities, food costs, those are all ordinary expected expenses. So it's fine.
Right.
Necessary. The Range Rover was not necessary to make deliveries. Um,
Yeah.
and customary, that's self-explanatory. And those are guidelines you can follow. And if you're very creative, you can fit those in those categories. Sometimes you got to look at yourself, look at the cost, look at the expense and say, could I defend this in an audit? And if you're laughing at yourself, then you can't.
Yeah. Well, the last thing, we don't even want to say the A word on the show because that's not fun. Nobody loves an audit for sure.
Nobody loves an audit, but if your books are clean and you've gone through your expenses and you've looked at them and you kind of follow that guideline that they are reasonable, ordinary, necessary, customary. So what if you get audited? The
Yeah.
IRS isn't auditing much these days, but
Are they even open? I'm sorry. I didn't say that.
they
Sorry. Are
are
they even
open.
working?
A skeleton crew, but yes.
Yeah. So I guess that let's kind of jump right into the next piece. You brought up a good topic about clean books. So let's talk about year-end financial housekeeping because I mean that's really important. You want to end the year strong and then start 2026 clean. So when we talk about clean, reconciled P&Ls, and you can explain what a P&L is in just a minute, or QuickBooks, why don't you talk a little bit about what clean means and what a P&L is and what you look for when you take on a new client?
So your profit and loss statement is generated from QuickBooks, and that's going to have all of your line item expenses listed there. And you want to go through those and look in each category. Look at your supplies, look at your utilities, make sure you've coded them correctly and you don't have, some random expense sitting in utilities that doesn't belong there. And you've actually QuickBooks is a great tool, but the problem with QuickBooks, it'll let you do anything you want, whether it's correct or incorrect. So you really need to finish your reconciliation, look at your P&L, go in line by line in each cost category, and look inside of there and make sure all of the items in there belong in there. Number one. Number two, which a lot of people fail to do, is when they reconcile, especially when you get to the year end, you need to make sure that you don't have any items that haven't cleared yet. Like, let's say you wrote a check back in March
Yeah, for
and that check
sure.
hasn't cleared. Well, why not? So, do we need to call that person, vendor, whoever it is, and see if it's a vendor, I'm sure they would already let you know if you didn't get or if they didn't receive a check from you. But
Yeah.
you want to clear those out because what happens, those are going to be on your P&L, and if that check hasn't cashed and you've got to reissue it, you need to handle it. Try to handle it before the year end, get it reissued or something so that your expenses are correct.
Yeah. Let me ask you a
Does that
question.
make sense?
Yes, let me ask you a question. So, one of the issues that we deal with in the restaurant business, and I'm sure a lot of business owners do, is payroll. A lot of employees, and I don't understand this, but they hold their checks. I have one person that works in one of my stores, and I'm not even lying when I say all of a
I
sudden,
know.
5 months later, there'll be 19 checks that come in. And I'm thinking to myself, why would anybody hold 19 paychecks? So, what happens when you get to the year end and now you're in January of 26 and you still have all these paychecks open? Then what do you do?
Well, that's a good question, and it, I get it, but that's why you want to look at your reconciliation screen and see you have all these outstanding checks. And I wanted to say this earlier, but The best year-end planning is not to wait to the end of the year
Mm,
to go through all these things, because now you're up against a deadline and you're scrambling and it's the holidays, and this is the last thing you want to deal with is chasing down people to cash their checks, among
yeah,
other things. But let's say it's January and we realize that, this particular employee hasn't cashed the checks. You're going to have to go in and either get him to cash them and if he still has them. A lot of
right.
times they don't even have them anymore because, they're a waiter or someone who their check, they live off tips. So their checks, they don't even care.
Exactly. They're
It's,
so small, they just forget about them, throw them in
yeah.
a drawer, and they might have 30 checks that are like $3 or $2 or $1, and then they're
Exactly.
like, "What am I gonna do with this anyway?" And it just screws up all of our bookkeeping.
So either you have to reissue the check and then you'll have to go in and make a journal entry against the old check
Yeah.
or get them to cash them. So
Oh,
maybe mid-year or quarterly, take a good hard look at those and start getting after those people to cash those checks so you're not dealing with so many at the end of the year.
yeah. So that also brings up a good point, and you said something really important, and that's something that we actually got so much better this year at. Years past, we've always waited till the end of the year to do all the reconciliations, and then do all the QuickBooks, and then you have months of coding. And one of the things that we decided this year, we actually started last year, was making sure that when we file the sales tax every month, and we do our sales tax filings in our office. A lot of people use outside services. We use them I mean, that's something I do, so I can do it every month. And when we do the sales tax, we actually reconcile the QuickBooks for all the restaurants. So
Perfect.
we've gotten really good. And a lot of banks these days will actually allow automatic linking to QuickBooks.
Mhm.
So not every bank, but many banks actually have a service now that you can actually link all the checks, and they just talk to each other. So QuickBook, you open it up and it automatically has every entry from the bank, and then you can set up automatic coding. So what we've been doing every month is, as we file the sales tax, we reconcile all of what's in the QuickBooks, make sure the coding's right. We hit to make sure at the end that everything equals, it zeroes out, and it's a done deal. So we're not waiting till January when it's time for our audit, because we do get audited, because being in the franchise business, we have to go through a full audit for all of our renewals for franchise. So with having to be audited, our auditor needs all of the QuickBooks, and that's a nightmare if you wait the entire year, because then it's weeks of coding and entering. So what you brought up is so important, that don't wait till the end of the year. This should be done monthly or weekly, and it's so much easier. Then you don't have to think, "Oh my god, what was that deposit? What was that check?"
Well,
Cuz
exactly. You might have a one-off vendor and you don't even remember like what it was for because it
oh
happened
yeah.
in January and now you're in November and you're like, I don't know.
Yeah, and that
And that
happens a lot.
happens a lot. And then the other part to this is, you might have fraud on your account. And, a lot of people, believe it or not, won't catch it because it might be a few $1,000s and they really didn't notice it. And now it's 6 months later or 9 months later or even at the end of the year and you're like, oh shoot, we have a problem.
Yeah, when you say
So,
fraud, like what type of fraud? Like, you're talking mistakes?
um somebody could fraudulently go into your account and take out money.
Oh, okay,
They
so you're
could
saying maybe in the business, like duplicating checks, or
anything.
yeah.
It
Wow.
happens a lot. And, your bank will usually take care of that for you, but if it's 6 months later, they might not.
Yeah, they might not even catch it. Half the time I catch their mistakes, so they're not catching our mistakes.
Exactly. Exactly.
Yeah. So when you talk about, all right, so we talked about reviewing the books, making sure they're clean and reconciled. What do you think? I mean, we mentioned a little bit of fraud or financial errors. Do you think there's anything that you can think of for the listeners that maybe might be a big, like, uh-oh, that you can catch ahead of time, like a financial error or anything that might hurt during tax time or end of the year taxes when you go to file your taxes? When you're talking like financial errors, like, I mean, it can be bank errors or coding issues, or, you know, there's so many different things. I know when you come here and you come to visit and you work in the office, I know you're like, oh my God, this and that. I always hear you doing stuff. So I know there's a lot of different things that can happen. I mean, not restaurant specific, but I'm sure there's got to be something error wise that, maybe as a tip. I know you gave me a whole list that we're going to go ahead and post at the end of the show, of these are the tips and the tricks, and you're kind of like, checklist of things that businesses can do. But is there anything on there that maybe you can think of that we can kind of give warning before we move on to our next fun topic of tip credits?
Um, Not there isn't any one thing that's popping into my head. You know, there isn't. I mean, we have income and expenses. The only thing that I can think of is, loans, if they get miscategorized as, income, which they're not. A lot of people, which I run into, try to expense loan payments, which they're not. Um,
How
uh,
can you expense a loan payment? You're talking like if they have a loan with a bank or like an equipment lease and they expense it
well,
as
an equipment lease can, depending on the lease, usually would be an expense for rent.
right,
But let's say I buy a big piece of equipment and it's a $50,000 piece of equipment. On the books, I would set up the asset and then you set up the loan, and those are all going to sit on the balance sheet. And then as we
right.
make the payments for that piece of equipment to the loan, that again goes on the balance sheet. And the only thing that we're going to pull off there at the end of the year or monthly, depending on how you set it up, is the interest that we're paying.
Right,
That
of
would be a
course, yeah.
deduction. But there are sometimes I'll have a client that comes in that does their own P&L, and I'll see under auto expenses is, $40,000. And I'm like, what is this from? Oh, well, that's my car payment. Well, your car payment isn't a deduction. Well, why not? Well, because the car gets depreciated, and that's your expense, the depreciation expense from the purchase of that car. But the
Yeah,
payment goes to the loan. You can't, it's double dipping, right?
yeah.
So
Huh.
that's something that I see people, like I said earlier, QuickBooks is great. It lets you do everything and anything you want. So it will let you expense a loan payment because it doesn't know that you.
Well, and it's not an accountant, it's a tool. And I mean,
Exactly.
all these systems, I mean, everything out there, whatever it is, they can be manipulated. They're not human, beings. So if a human being tries to manipulate a system and get the system to work, the system's going to do what
Let
it's told to
allow
do.
exactly. That's why I mean QuickBooks
Yeah.
will literally let you do whatever you want.
Hmm.
And then people just keep going and they're like, "Well, it let me put it there." It's like-
Perfect. And then they come to their accountant and they look
Yeah.
at the books and they're like, wait a second, no.
Yeah, exactly. Exactly.
Gotcha. So right now there's so much controversy, and I don't want to get too convoluted and too detailed into this whole tip credit thing and
Me neither.
compliance,
Me
and
neither.
I'm sure nobody does. But
California
and
doesn't allow it, so
and you know what? That's interesting. But you know what? California is an entity of
special.
itself. I mean, what is your hourly rate these days in California? $30 an hour? What
Oh
is
my
minimum
god.
wage? What is minimum wage
I
nowadays?
don't know. Probably 20, 17, 18. I don't know.
I was gonna say it's gotta be high because I
It's
mean,
high.
minimum wage just keeps going up and up and up and up and up. And it's funny because Jannar and I will talk and we'll say, okay, great, minimum wage keeps going up and up, and I'm all for quality of life and taking care of the employees. I mean, we take really good care of our employees, and we treat everybody very fair. But at some point you can only pay so much for a piece of chicken or a mac bowl. I mean, there's got to be that balance of um, profitability and expenses. One day
Yeah.
everything's going to be upside down because somebody's going to say, well, how can you charge $30 for a cheeseburger? Well, if you go to New York, you're going to pay $30 for a cheeseburger because they pay $30 an hour to the person that's serving it. Crazy.
Exactly. No, I know. It's crazy. But I will
Yeah.
say it's 77 degrees right now.
It's 77 degrees where you are.
Uh-huh.
Did you just say that to rub it in and change you know what? You totally just did that to not only change the topic, but to get off tip credits and compliance. Is that kind of like what happens when you're watching Nemo and Dory goes, "Oh, accessories." That would be my friend Jill. Okay, I'm so jealous. All right, so for everybody listening, Jill's on the West Coast and it's 77 degrees, and I'm on the East Coast and I think it's minus 77 degrees. And we're supposed to have the worst, coldest weather from now until Christmas ever on the East Coast. So, Jill, what did you start off by saying? You're coming to visit on Sunday? You better bring
No.
a puffer coat.
Oh my gosh.
Miss 77 degrees. All right, so back to compliance and tax, because like I said, we could go off on so many different tangents. I do want to say, and Jill brought up a really good point about federal and state specific tip credit rules. So, um, for everybody listening, there are federal rules to follow, but you definitely need to look into your state because every state has different rules, regulations, documentation, requirements. And the last thing you want to do is avoid any type of wrongful wage claim because there's attorneys out there right now and lawyers out there that they wait for restaurants and businesses to do something wrong. And then they go after you for like the little gray area. So, it's really sad these days in business that, you're trying to make a living, you're really trying to watch everything you do, be compliant, take care of your employees, be profitable, and then avoid any type of mistake because that mistake could be really costly, It's really
Yeah,
hard.
more
But
than you'll ever save on tip credits.
yeah, exactly. 100%.
So if
Um,
you're in a situation where you are going to take advantage of the tip credits, you've really got to be on top of it and be extremely compliant. And that's all I'm going to say about that. It's a great tool to use, but you really have to go into it just spot on.
yeah. Just curious, are there any systems out there or is it or mostly everything with tip credits have to be done like through your accountant or bookkeeper or state? I mean, are there I don't know because we don't have a system that does tip credits. I do everything through our accountant and our payroll company. But do you know of any systems that do that? I don't
I
know.
don't. I don't. Again, it's not something that I ever deal with
Yeah. I didn't
being here
realize
in sunny
California didn't
California
have
at 77 degrees.
yeah, I didn't realize that California did not have tip credits. Okay, we're moving on to the next topic. I got it. I got it. 77
But
degrees.
I
All
do
right.
want to
Well,
say something, Michelle, about the system. So
yeah.
one of the biggest tips I can give is having a great POS system that's integrated with your inventory, that's also integrated with your payroll, because
Yeah.
that would keep everything very smooth for tips and everything else.
Yeah. I agree with that. The only problem is there's so many systems out there that don't allow you into the back end. Like, for example, we use Toast. Toast is probably one of the most user
Popular.
friendly
Yep.
system. It is. It's the most
Mhm.
popular and it's easy to use. But then you have programs like Micros out there that you literally have to be a brain surgeon. We had Micros in one of our stores. Jill, I thought every time I had to program something, change something, add something that I needed to watch a YouTube video, call the sales tech, get Steve that works in my office and does all the IT stuff. I couldn't even like change a price. I'm like, what the hell? Because they lock the back end so much. So it's really hard these days to find a program that really integrates everything. We're in the process of doing that now, trying to find one that integrates payroll, integrates, some type of inventory management system. So this way it's easy for the not only is it easy for the bookkeeper or you or accountants or the owner, it's easy for operating your business because you don't need to have, you know, somebody count an inventory. It just takes the human mistake and you know how they always say that you put a human involved there's always room for error. It takes the error out of that, and but it's not that hard. Not, systems out there don't really integrate everything anymore. They're getting better.
Yeah, and I agree with you that a lot of these systems that can do all this for you, and like you were saying, how it's locked on the back end, and that's trying to avoid the human error, like in QuickBooks, how it will allow you to do anything you want. And your problem with these systems is it won't allow you to do anything you want because it's trying to keep a control. So yeah, there's a happy medium out there somewhere, I'm sure.
Yeah. All right, so I do have to ask this question. Everybody always says Q4 of the year is the time to really do the biggest write-offs, whether it's make a donation, whether it's buying a car, they always say go buy the heaviest SUV vehicle in Q4, you can write off as much as you can. Is it a good idea to make those purchases at the end of the year? Like, what does that strategy look like? Do you have any write off suggestions? I mean, what can you do now to help reduce your 2025 tax bill? Do you have any suggestions?
Well, that's always a hot topic for me. I have a lot of clients that just want to spend all their money at the end of the year and buy useless equipment. that just rots in their yard that we depreciate and they get the write off, but now they have a depreciated piece of equipment that they don't even need. So, my advice is always yes, look at your numbers, see where we're at on profit. Because remember, we pay tax on profit whether we take it out and spend it or not at the end of the year, right?
Yeah.
And a lot of people can't wrap their arms around that. And they're like, well, I didn't spend it. It doesn't matter. You have to draw a line in the sand, cut it, and you're going to pay profit or sorry, tax on your profit.
Right.
So if you, depending on the industry that you're in, but if you need a piece of equipment or a new automobile, or I'm having 2 new computer systems put in my office today because of Windows 11. But anyway, um, if you need it, buy it. Buy it now before the end of the year. But I never want you to go out and spend money on stuff you don't need.
Yeah.
And
Well,
and a lot of people tend to do that. They'll go buy something just for the write-off. They'll go buy a new vehicle just so they can, 6,000 pounds or more, so they can get that write-off. Did they really need it? No.
yeah. Well, they buy the vehicle, but do they pay cash for the vehicle? And then they get the write off, but then they wind up with a big car payment.
Yes. Well,
And
and
then what happens for preparing for a strong start to 2026?
well, exactly. And then I have clients that want to write off, take accelerated 179 depreciation this year. And then, well, what about the next 5 years? What do you got then? So that's another thing that you need to talk to your accountant about too when you're making these big expenses, how you want to handle that write off. Do we need to take the expense all in 2025, or is this something that we're going to spread the depreciation over the full life of that asset, whether it's 5, 7 years?
Yeah.
Those are things you need to talk about too. But again, if you need it and you have the cash flow to buy it, do it. But if you don't need it, don't spend money just to get the write off.
Yeah. I guess when you balance the scale, does the scale equal and is it really worth it should be the question. And I guess that goes back to hiring a very good bookkeeper or financial advisor or accountant to make sure that you're making smart business decisions.
Exactly.
Yeah. So that leads us into preparing for a strong start in 2026. I mean, we could have some really good talking points that we can send to the listeners, talking about what's their budget, what's their cash flow planning. Are they going to buy new systems or upgrade their POS system or some type? And you mentioned integration, which is so important. But what would you say? And I know you emailed me a list of some smart tips, but what would you say are your biggest suggestions for your clients when they go to prepare for 2026?
Y- Preparing for 2026 is just really continuing from 25. So I would start off my year by learning from my mistakes I made the prior year, corrections in procedures that we found failed in 2025, and really trying to focus on keeping your books, like you said, monthly, up to date, current, accurate, no commingling of personal and business.
Hmm. When you talk about financial habits for 26, because we mentioned that a few times, and I'm going to call it a habit because hopefully they've learned from their mistake. And what do they say? It takes 21 times to form a habit. So let's just talk about financial habits because that's one thing that we've gotten much better at. We've done things that don't work. And I always say if you fall down and scrape your knees, hopefully you get up and you learn before you fall and like break a leg. But do you see any, or maybe you know about it already, any type of regulatory changes or anything that you think is coming down the line? I mean, and I know obviously you can't look into a crystal ball, but what's your thoughts about 2026? I mean, this government and things are so crazy now. Have you heard anything or anything we should prepare for? Or, okay, or is that a joke and a laugh because things change every day?
We're living in the wild, wild west. I have no idea what's going to happen. It seems like things change rapidly. From the tariffs to this new tax law, I don't know. I
Yeah.
don't know what's going to happen.
So that goes into what about, uh, you know, with your role? I mean, obviously, every time I talk to you throughout the year, you're in Vegas at conferences, and what's the basis for you to stay up to date with everything? I mean, do they, because they're changing things so rapidly? And I mean, can you imagine business owners are having a hard time keeping up? What about bookkeepers and accountants and people like yourselves, professionals in this industry? I mean, how do you keep up with all this?
Constant continuing education.
Yeah.
Constant.
Oh, I'm sure.
Um, the one thing in what I do is, it doesn't change. Income and expenses for businesses, back to reasonable, ordinary, customary, necessary. That doesn't change. Limits on what we can deduct, the 179 depreciation, those things change. But the the nitty gritty really doesn't change. In 2018, we no longer can expense entertainment. That changed. That was a small, big change.
Yeah.
I still have clients trying to expense entertainment expenses, and I'm like, we can't do that. Why? When? 2018, that changed.
Yeah.
So there hasn't been a lot of big changes since 2018. This whole tip, tax-free tip on $25,000, that's going to be a change, but that doesn't even affect you. That's going to affect, when people file their tax returns.
Right.
Um,
Huh.
there really, I don't know. There isn't.
So I'm going to tell you something. You're not even going to believe it, but our show is literally almost done. And we have a couple things we have to cover. I told you it was going to go so fast. These shows go so fast that I'm through 40 minutes and I'm like, where did the time go? And we didn't even touch on half the things we wanted to talk about. But before we end this show, I told you it was going to go so fast. But
Wow.
before we end the show, I'm putting you on the spot. I sent you a couple rapid fire, quick, 2 second, actually, let's say not even 30 seconds of things that you can give to the listeners since we didn't cover everything we wanted to. Rapid fire. One compliance item to check.
Oh my gosh. Just making sure that you have filed, and this isn't an a year thing, but
All right,
throughout the
10
year,
seconds, girlfriend.
making sure that you have filed and met all your deadlines for sales tax returns, payroll reports, which a lot of that's automated now, but that would be one.
Okay. One thing not to do at year end.
Wait till the last minute.
Oh, that's a good one. I like that. And give me one system that every business should definitely adopt.
As far
Any
as what do you
any
mean?
system. If you had to make your job easier to file their taxes and get them set up, give me one system.
Like a good POS system, or
Okay.
just practice?
POS system's good. I'll take it because we've had some pretty bad POS systems and they make my life a nightmare. So,
Well,
and you know what? When you say POS, it's the point of sale system. That's what POS stands for. But it's not even just the point of sale system. It's the reporting you can pull from it. You could pull every report from sales to payroll to inventory. So, all right, Jill, I told you I was going to put you on the spot. But
but
all right,
the
I'm going to
biggest
give you
the
the
biggest thing is, wait, the
easiest question of the day. What are you doing
okay.
for Christmas?
Oh, family. We're gonna go to Greg's daughters in the morning, and then his sisters in the midday, and then my sisters in the evening.
So family all day. And you
Family
get your
all
daughter
day.
home and she's
And I'll
coming
have my,
home.
yes, I'm coming out to see you and pick her up and bring her home.
I know. It's so exciting. Can you believe Christmas is literally in 2 weeks?
I I I can't.
Two
I
weeks, and then we have New Year's. And I don't even know if you know this, but w maybe it's too early. Have you set a New Year's resolution yet?
I
I don't know
have.
how you can, because 'cause you're
I
in great
have.
shape, you lost a ton of weight, you look amazing, so you can't say your New Year's resolution is to lose weight.
It's gonna be to quit vaping.
Oh, okay, I love that one, that's a good one. Actually, you know what? That's a whole whole 'nother show. We're not gonna talk about vaping and smoking in restaurants. That's a whole whole 'nother podcast, but you know what? That's a really good New Year's resolution.
Yes. Well, I've been trying to give it up, but it's my stress reliever, so I gotta find a different one.
Well, everybody, that is our show once again. And Jill, for closing and key takeaways for everybody listening today, take away that you should not wait till the end of the year to go through your books and go through payroll. Understand what your tax rules are in your state versus federal. Be smart, be compliant. As Jill said, you definitely want to have your P&Ls clean. The last thing you want to do is open yourself up for mistakes or audits. Make sure you have amazing systems so you can pull reports. And, you know, Jill, for everybody listening, can you tell them where to find you in case they have a question? Do you have a Instagram or an email?
You can email me at jill@acmetax.net.
And we'll post that as well. And I think that's all we have for today, Jill. Just you and I. And you know what? I'm going to talk to you later anyway. But for everybody listening, that's Dine and Dish and another episode. And we'll talk to you soon. Thank you, Jill. Love you.
Thank you. I love you too.
Okay, bye.
Bye.
Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities, so do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
From lashes for days with the viral Liquid Lash Extensions mascara to awakening your eyes with lift and color from the Brilliant Eye Brightener, Thrive Causemetics is the go-to when you want to amplify your everyday look. Plus, every product is 100% vegan, cruelty-free, and made with clean, skin-loving ingredients that work with your skin. And for every product purchased, Thrive Causemetics donates to help communities thrive. So every time you use your favorite Thrive Causemetics product, you're helping communities you care about too. Amplify your everyday. Go to thrivecausemetics.com/shine26 for an exclusive offer of 20% off your first order. That's Thrive Causemetics, CAUSEMETICS.com/shine26.